Picture this. It is November 3rd, 1907. You are standing inside a private library on 36th Street in Manhattan. The room is filled with cigar smoke and the wealthiest men in America. But nobody is drinking. Nobody is celebrating. They are terrified because the doors are locked from the outside. The man holding the key is 70 years old. He has a purple, bulbous nose from a condition called rhinophyma. He hasn't slept in 48 hours. He sits at a small card table, playing a game of solitaire. He tells the men in the room they are not leaving until they pledge $25 million to save the trust companies of New York. If they don't, the stock exchange will not open in the morning. If the exchange doesn't open, the American economy collapses. There is no Federal Reserve to save them. There is no government bailout. There is just this one man. His name is John Pierpont Morgan, and he is deciding the fate of the United States economy for the second time. To understand how one unelected banker gained the power to hold the country hostage, we have to go back. Most American tycoons began with nothing. John D. Rockefeller was the son of a con artist. Andrew Carnegie was a bobbin boy in a cotton factory. But J.P. Morgan did not rise from the ashes. He was born on the throne. His grandfather, James Pont, didn't just attend Yale, he helped found it. His father, Junius Spencer Morgan, ran a merchant bank in London. In 1856, this gave Morgan the one asset money couldn't buy: access to the British Empire's checkbook. While other Americans were scraping for capital, Morgan had a direct line to London. He didn't need to be smarter than everyone else. He just needed to be the bridge. And in 1861, he proved exactly how ruthless that bridge could be. The Civil War breaks out. The Union Army is desperate for weapons. Morgan is 24 years old. He sees an opportunity in the chaos. The Army has 5,000 Hall carbine rifles sitting in an armory in New York. They are obsolete. The government sells them for $3.50 each. Morgan finances a deal to buy them. The very next day, his partner sells them back to the Union Army in St. Louis. The price? $22.00 each. They bought them for $17,500. They sold them for $109,912. That is a 528% profit in 24 hours. To make matters worse, the rifles were defective. They were known to blow off the funds of the soldiers firing them. The government refused to pay. Morgan sued the government, and he won. This was the lesson that defined his career. Inefficiency is profitable, but control is absolute. Morgan didn't want to build things. He wanted to organize the people who built things. By 1870, the American economy was a mess. It was the Wild West of capitalism. Railroads were undercutting each other to bankruptcy. Rates fluctuated wildly. Morgan looked at this chaos and saw a math problem. He believed competition was wasteful. His solution was a process that came to be known as Morganization. It was simple: bankrupt the company, buy the pieces for pennies on the dollar, consolidate them into a monopoly, stabilize the rates. Getty Images, he did this to the railroads first. In 1889, he summoned the railroad presidents to his home. He didn't ask them to cooperate. He told them to stop competing. He created a gentleman's agreement to fix prices. He controlled 1/6 of the entire American rail system. But railroads were just the veins. Morgan wanted the heart. In 1878, Thomas Edison invented the light bulb. But invention is useless without capital. Morgan was the first venture capitalist. He wired his own home on Madison Avenue with Edison's lights. It was the first private residence in New York to have electricity. His neighbors complained about the noise of the generator in the basement. Morgan didn't care. He merged Edison General Electric with its competitor, Thomson Houston. The result was General Electric. This put him on a collision course with John D. Rockefeller, Rockefeller owned Standard Oil. He sold kerosene to light American homes. Electricity was an existential threat. Rockefeller launched a PR campaign claiming electricity caused fires. He tried to scare the public. But you cannot fight a superior technology funded by infinite capital. Morgan won. General Electric became the standard. But Morgan wasn't satisfied with the light. He wanted the steel that built the cities. It is 1900. Andrew Carnegie owns the steel market. He is the richest man in the world, but he wants to retire. Morgan scribbles a number on a piece of paper. He hands it to Carnegie's lieutenant, Charles Schwab. Carnegie looks at the paper. He nods. I accept. There were no lawyers, no contracts. Just a handshake for the equivalent of $17 billion today. Morgan took Carnegie Steel and merged it with Federal Steel and National Steel. The result was U.S. Steel. It was the first corporation in history with a market capitalization of over $1 billion. To be precise, $1.4 billion. The total budget of the U.S. federal government that year was only $517 million. Morgan's company was worth 3 times the government of the United States. He was now more powerful than the president. And in 1895, the president had to come begging. The U.S. Treasury was running out of gold. Under the law, the dollar had to be backed by gold reserves. If the reserves dropped below $100 million, panic would set in. In 1895, the reserves hit $9 million. The United States was hours away from default. President Grover Cleveland refused to ask Wall Street for help. He knew it would look like a betrayal of the public. Morgan took a train to Washington. He sat in the White House while the president ignored him. Finally, a clerk entered. Mr. President, there is only $9 million left in the vaults. Morgan spoke up. I know of a law from 1862 that allows the Secretary of the Treasury to buy coin without Congress. He offered a deal. He and the Rothschilds in London would buy $65 million in gold bonds. They would pay in gold, and they would guarantee the gold stayed in the country. Cleveland had no choice. He signed the deal. Morgan saved the government, but he didn't do it for free. He charged a premium on the bonds. The syndicate turned a profit of roughly $7 million. Critics called him a traitor. They said he was profiting from the nation's failure. Morgan's response was silence. He didn't care about popularity. He cared about stability. Which brings us back to the locked library in 1907. This was Morgan's finest and darkest hour. The Knickerbocker Trust had failed. The contagion was spreading to healthy banks. The stock exchange was minutes away from closing for good. Morgan was the only authority the market respected. He forced the bank presidents to pool $25 million. He forced the trust companies to save their rivals. He saved the brokerage firm Moore and Schley by buying Tennessee Coal and Iron. He even strong-armed President Theodore Roosevelt. He told Roosevelt, "If you don't let your steel buy this company, the market crashes." Roosevelt, the great trust buster, had to let the monopoly grow to save the economy. Morgan succeeded. The panic ended. But the victory was fatal. The American public looked at 1907 and realized something terrifying. One man had the power to save the economy, which meant one man had the power to destroy it. Congress decided that no private citizen should have that much control. In 1912, they launched the Pujo Committee hearings. They dragged Morgan to Washington. They grilled him on the money trust. The lawyer asked him, "Is not commercial credit based primarily upon money or property?" Morgan gave his most famous answer, "No, sir. The first thing is character. Before money or property. Before money or anything else. Money cannot buy it. A man I do not trust could not get money from me on all the bonds in Christendom." It was a brilliant line, but it was the end of his era. The government didn't want character. They wanted a system. The hearings broke him. He was 75 years old. He felt betrayed by the country he had saved twice. He traveled to Rome in 1913. His health collapsed. He fell into a deep depression and delirium. He died in his sleep on March 31st, 1913. When his will was read, Wall Street held its breath. They expected him to be the richest man in history. But his estate was valued at only $80 million. That is about $2.5 billion today. When John D. Rockefeller read this, he shook his head. He said, and to think, he wasn't even a rich man. Rockefeller was worth nearly $1 billion in 1913 money. Morgan wasn't the wealthiest. He was just the most necessary. So, what did Morgan leave behind? Months after his death, Congress passed the Federal Reserve Act. They created a central bank to do the job Morgan had done alone. They replaced the man with a machine. In 1933, the Glass-Steagall Act forced his empire to split. It became J.P. Morgan, commercial banking, and Morgan Stanley, investment banking. Today, J.P. Morgan Chase is the largest bank in the United States. It holds $3.9 trillion in assets. But the question remains. In 2008, when the economy collapsed again, what happened? The government called the bank's CEOs into a room. They forced them to take capital. They forced mergers. It was the exact same playbook Morgan wrote in 1907. We built a Federal Reserve to get away from men like J.P. Morgan. But when the chips are down, we still need a savior. So here is the question for you. Was J.P. Morgan a hero who stabilized a young nation? Or was he a villain who profited from its chaos? I want to know what you think. Drop a comment below. I read the early ones. And if you want to understand the man who actually was richer than Morgan, you need to watch this video on John D. Rockefeller next. The rivalry between them didn't end with electricity. Click here to watch that. I'll see you there.